Let's build wealth. Building wealth is not something that you're gonna do by saving in a savings account, by hoarding your money and not putting it in the market. So let's find out exactly how to get started. Welcome back to First Gen Money, a YouTube channel for all things money and lifestyle from a millennial's perspective. In today's video, we're gonna talk through how to get started with investing. And when I talk about investing, I'm talking specifically about investing in the market, not any real estate investing or alternative investing. If you haven't already, I made a video earlier this year, you can find that here, where I talk about the importance of investing and why you need to get started. So if you have not yet watched that, go ahead and give that a listen. First, I want to talk about a misconception that I hear a lot, and that's the idea that investing is day trading. Investing is not long-term retirement. Investing needs to be fun, and investing needs to be an active thing that you are doing. Yes, active investing is real, but so is passive investing, and that doesn't make it investing any less. I also hear individuals say, well, I don't want to wait 40 years to become a millionaire. I want to become a millionaire now. I want to build wealth in the next 10 years. So I need to buy and sell stocks. That is the only kind of investing that they see. And when the whole GameStop frenzy was happening, I was hearing from people who, weren't regularly investing, saying that they were going to buy GameStop stock and that they were going to put everything they had in that to be able to make some money. And there's nothing inherently wrong with that. If you want to do that, go ahead. But I think the problem is when you're not making investing a regular habit that you do and you only see it as a one-time opportunity to make a big buck. Investing in the stock market can be both long-term and a short-term strategy, obviously, and I believe I touched on this in the earlier videos that I've done on investing, but if you are putting your money in the stock market for a shorter amount of time and not long-term, there is more risk involved. And if you're somebody who is okay with that and is okay taking risks, then that might not scare you, and that is fine. But when we think about how to get started in investing, I think we get confused a lot of the times with what exactly we define as investing. And part of that is, which Erin Lowry actually talks about in, I forget which one of her books, but she talks about the fact that people say, let's save for retirement instead of let's invest for retirement. So we've come to think that retirement isn't investing because we continue to say, let's save, let's save, let's save. So I want us to also think about investing as a long-term strategy and something that you're going to have to continue adding to, because regularly investing either in your retirement accounts, in a health savings account, or in your brokerage account is going to be the way that we build wealth. And it's really important that we start talking about how to do it. So the how to actually start investing. I usually recommend individuals check what tax advantage accounts they have access to. And when I say tax advantage accounts, I mean accounts that actually provide a tax incentive. So either you defer taxes now or you're tax exempt on it later when you go to withdraw the money. I recommend hitting these accounts first because they do offer that tax benefit. Some of the tax advantage accounts that you might have access to are 401ks, 403bs, 457s, Roth IRAs, traditional IRAs, 529 plans, the ones where you save for education, health savings account. All of these are tax advantage accounts. So all of these are simply accounts. They hold the investments. They hold the investments and they also provide those tax advantages. But they are not investments. Your Roth IRA is not an investment. What you invest in within your Roth IRA is an investment. So for instance, let me think of a quick example. I have this empty jar. This is my 401k. It's gonna hold things. It's also gonna provide me the tax advantage benefit of deferring taxes now, but when I withdraw the money, I need to pay taxes later. This is a stock market index fund. So it holds about 1,000 stocks in an index fund. If I just have this, my 401k is 100% in this stock market index fund. If I add a little bond index fund, maybe you want to say 10%, then my 401k holds two different investments, right? It holds 90% of stock market index fund and a 10% of a bond index fund. And those are my investments. These are my investments. The 401k by itself is not an investment. Going back to the tax advantage accounts, why start there? I mentioned that they're tax advantage. I gave you that 401k example. That means that when you contribute to a 401k, we're just talking about 401k right now as an example. You are, let's say, you are putting some of that income before it gets taxed into this account. And so you get taxed on actually less income because you directed some of that income into this account. And so that's why there's a tax benefit there, because you're not paying that tax on it today, but you will need to pay a tax on it later when you go to withdraw that. Now, 401ks act a little differently. I made a whole separate video on the different retirement accounts, how they work with taxes, and I'm gonna link that up here so you can watch it. So you wanna get ahead of these accounts first. You wanna take advantage of any tax benefits that you can receive, because taxes are probably our most expensive category. We pay more taxes than anything. Earned income and income you make at a 9 to 5 actually gets taxed more than other sources of income. So it's important for us to understand how we can minimize our tax burden. Here's where people get tripped up. They understand they need to have a 401k, they need to open a Roth IRA, but sometimes people will open these accounts and then that's it. They leave them there, they throw money from your checking into this account, and they don't go in there to actually elect your investments. So as I gave you that other example with the 401k being this empty jar and the highlighters being the actual investments, when you open this account, you need to make sure that you are electing investments, that you are making the decision about where you want this money that you're putting into to go. Because if you don't actually elect investments within these accounts, your money is not gonna grow. Your money is actually gonna sit in like some purgatory state where it's not in your checking account, it's not actually invested, it's just like sitting in a money market account in the brokerage. It's sitting there waiting to have something done. If it stays there for a year, 2 years, because you never really logged in to see what your money is invested in, that is when it's a huge missed opportunity. Make sure that your money is actually being invested. I'm gonna share this photo right here where you can see that I have money sitting in a money market account waiting for me to elect what the hell I'm gonna do with it. Now we get to the part where a lot of people are like, okay, well, I give up because I don't know how to elect my investments. And honestly, it doesn't need to be that complicated. If you have access to a retirement account like a 401k, 403b, 457 with your employer, there's gonna be options there for you to choose from. What you're gonna wanna understand is what your risk tolerance is, which is really your okayness with like being risky. And you also need to understand what the expense ratio is for an investment that you are choosing. When you are putting your money in a actively managed mutual fund or whatever it is, that is gonna have a higher expense ratio because there's actually administrative costs. People are actively managing that. If you choose an index fund, those tend to have smaller expense ratios because they're passive funds. So you definitely wanna see what are the expense ratios, the lower the better, and what is that fund that you're electing? What are the investments that you're electing? What have they yielded in the past? Every kind of investment option you're gonna have for that is gonna have a prospectus. Take a look at it, see what kind of things it's invested in, what the average rate of return has been, how much percentage is in stock, how much percentage is in bonds. There's also options to be in a target date fund, which is just a fund that targets the date that the year or time when you're gonna wanna retire. And then based on that, it moves investments within that account around to fit somebody who might retire in 2065. If you don't have access to a 401k, or you do and you've already elected those and you're moving on to something like a Roth IRA, and you kind of are overwhelmed with the amount of options that you can choose from, then you can choose to go with a robo-advisor. And I actually started with a robo-advisor. I started with Ellevest. My mom now has a Betterment account, and what that does is like you literally create an account, you give all your information, you say like what your goals are. You have different accounts within the actual robo-advisor where you tell them, hey, my goal is to retire in this many years, I want to have this much, and they'll actually do the electing for you. Now, you don't really get to pick where your money goes. You just tell them what your goals are, and then they'll pick them for you. You don't really log in there to buy any individual stocks if you felt like you've already maxed out everything else and now you want to explore individual investing or individual stock investing. So robo-advisors, I think, are great to start because they really help with that fear of not knowing exactly what to pick. And then eventually when you're feeling more comfortable and you're learning more about like what and how to actually elect investments for yourself based on your risk tolerance, based on your own goals, then you can transfer that money into a different brokerage, right? So I transferred mine over to Vanguard, and now I'm doing the manual electing of my investments. That's what I recommend first when people are like really scared about what to elect, but really want to dip their toes in. Just open a robo-advisor, start investing, and keep learning. But don't like think that you need to learn everything first in order to just start, because then you're never going to start. Okay, so I'm not going to talk about my full investing journey because I feel like I've already shared that. Maybe I haven't, but I do want to tell you what my strategy was in 2020 and what my strategy is for 2021 when it comes to investing. In 2020, I made it a goal, and I've made it a goal for the past 3 years to max out my Roth IRA. That was $6,055 2 years ago, but $6,000 last year, and that was $500 every month. Within my Roth IRA, I decided to put everything in Vanguard's VTSAX, which is their stock market index fund. It invests in over 3,000 different companies. It is at a very low expense ratio. It's 0.04, and I decided to like just put everything in there, right? It's 100% in VTSAX. That's fucking risky, but because I am in my 20s, I'm okay with that. And later on, I'm going to shift it so that it's not all in VTSAX, that I have some bond options there as well, because I want to minimize that risk as I get closer to wanting to use that money. I went about it thinking like, hey, I want to be risky. I don't really care. Let's just do it. When it came to my 401k, I attributed almost $12,000 in my 401k. In my 401k though, I decided to elect a target date fund. I didn't want to go into, choosing the different options, and because I was limited to what was actually in that 401k plan that my employer offers. And then I continued to explore individual stock. I bought a few stocks for Peloton. I bought some Disney stock. I bought some airline stock. Just because I'm doing it for fun. I'm buying it, I'm holding it. I'm not going to sell those. I'm just kind of going to let them chill and grow in those accounts. I have no intention on selling them. I also had a health savings account, and I talked about this in my health insurance video, which I'll link up here, where I had a high deductible plan. Having a high deductible plan in that year was really stressful for me because I just wanted to be able to go to the doctor and get things done without fearing like what I was going to need to pay after the appointment. I did not invest in that account because I did not yet hit the minimum that you need to start investing within your health savings account. 2021 strategy though, I am continuing to max my Roth IRA. I am now trying to max my 401k, and as of last month, my employer, the HR software that they use, partnered with Fidelity to offer self-directed accounts. So now my 401k is actually giving me the option to choose where my investments go through Fidelity. I yesterday logged in, made the switch from a target date fund into self-directed. And I haven't been yet given access to the Fidelity and elected my investments, but when I do, it's gonna be that same strategy as my Roth IRA stocks. Also because I'm okay taking that risk right now. I'm still buying individual stocks here and there. I don't have like a goal that I wanna reach, but I do wanna continue just throwing any extra money into like individual stocks in companies that I care about. Health savings account, no more. I decided to get the most coverage for my health insurance because I'm getting everything done this year. I'm working with a neurologist. I want to make sure that my foot's okay, all these different things. And I just want to pay as little as possible in terms of like co-pays and all of that stuff. Next year, and this year when I have to elect benefits, I'm gonna switch over again to that that health savings account because I see the benefit in actually being able to invest in it now. And in this year, I want to earn more so that I can continue investing. And now if I am already maxing out my 401k and already maxed out my Roth IRA, don't have access to an HSA, where do I continue growing my investments? That's when I now would open or actually use my Vanguard brokerage account, which is not tax advantage, but it allows me to just contribute an unlimited amount of money into that. That's kind of my strategy. Some things I want you to consider when you're first starting out. I want you to consider like how you are as an individual. Do you feel like you're the learner who needs to learn everything right off the bat before you go and elect your investment options? If that's the case, like you might not get started right away. And it's just important that like you start investing as soon as you know you need to start investing. So make sure that you're not letting education get in the way of action. I 100% think education is important, but if you just need to act, just open a robo-advisor, invest there to begin with, and then you can switch over and elect what you feel is right for you. That was really how to get started. I'm gonna continue doing investing videos because it's really important that we talk about this because that is how we build wealth, right? We don't build wealth by throwing everything in my Ally account and having different sinking funds. If you like this video, please consider subscribing, like it, and leave a comment. Really, I appreciate you all. If you watch this far, it would make my day if you let me know how you enjoy this video. I look forward to seeing you all in my next video.